Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Thursday, May 29th, 2025. What a strange day today was. I think the Bulls are kind of showing that they're pretty tired up here, meaning that they're having a tough time finding buyers to follow through, because this is the second time where we had a big gap up and it sold off, and then we had a big gap up and it sold off. So they're having a tough time with any kind of follow through right here. And today we actually took, here's the gap, back gapped all the way up here, and we actually took out the lows at one point here. So it was definitely, and then it battled back up, and it was a rough day. Even for in the trading room, I sometimes you have to have a feel for if you're going to be having to trade each side, because we did the same thing we actually did a straddle. So we did the 206s on IWM, and it went all the way down to 204.50. But I kind of thought it was going to keep going, and we were going to do our normal $1,000, but it reversed and came right back and closed right at 206.25 or something. It was a terrible day for that. We would have traded out of that, we would have been able to break even, maybe have a $100 loss or something like that, but it wasn't good. I did made a couple good SPY trades for the fund, but let's get back to this and figure out what's going on. So here's the low. Let me see, is that the low or what? Oh yeah, that's the low. It's a wick. So this is where the whole thing changed right here. But in any case, so from this low to this high, that's just from today. You can see we're right. We hit our head on the 62% retracement. If it gets through it, the next line is going to be right up here to 78%. Now, if this is just where we came up, down, and then this is wave C. So here's our A. This would be our wave B. And this is our wave C. So if that's the case, you can see that it actually lands right in that, right around that 59.30, and these highs will not be taken out if it reverses. So that's something to look for. Now, if we look at the 15-minute chart, what we want to do is figure out where's support on the downside, and that's from when we started this gap on Monday. And we gapped down. What is it, Monday? Okay, I'm getting low. Okay, here it is. Here's that Monday. So we gapped up and came up to the tops, and then from there we had a little bit of a sell-off, then we gapped up again. So now what we want to know, you can see when we're coming down, we keep finding the support at the 38% retracement. So this is, and it's also the moving average right now. So this seems to be retail traders right now, because every time we get close to a moving average, whether it's on the up, if we're going down or we're going up, they're trading it. So it's kind of tough to trade against them sometimes, because actually it's easy. All you have to do is look at the moving averages. But in any case, that's neither here or there. So if they take these lows out, and let's just say again, this is an A, this is a B, and this is a C, you can see it's taken us right around that 50% retracement right here. And you can see where we have 1, 2, 3, 4, and this just did make a higher high. So if this is an A, B, C, and it holds here and then heads higher, this probably would be a wave. I'm not sure what it would, because I'm not good with the little squiggles as far as wave structures. But if it is, then we could be heading up and testing the all-time highs. If we had, well, not the all-time highs, the highs that we made on May 20th. So that would be a chance on that, and it'd just be very sloppy, honestly. And like I said, it's getting pretty sloppy up here now, and that's why I have this circled. So here you can see we had our gap up. Once we got here, that's the next day we started selling off, found support at the 38% retracement, gapped back up again, and we found that and came back down right back to the 38% retracement. So if we're going to use that theory on this, here's our range that we're trading in right now. It's right here. So once it breaks out of either the 38% retracement or breaks above it, that's where we're going to know what the direction, really what market has in mind. If it breaks above this, obviously we're going to be coming up and testing the 59.70 highs. If it breaks below it, then we have to keep an eye on the 58.47 and then down at the 58.35. But remember, we have that wick that's pointing all the way down here. So the 78% retracement would make sense at the 58.05. So that's really what I'm looking at. It's whoever can break out of this this little range here is going to win it. And if it's to the upside, we're going to be coming up and testing or breaking these highs. If it's to the downside, we'd have to watch this area, but I'm actually thinking it's going to be coming down to the 58.05. You can see we have bearish divergences. We have them here on the 60-minute chart, but I'm not sure if we have to form another one here, because you can see it's coming down. It doesn't always have to be that way, because once you get a divergence and you get a drop and then back up again, usually this is a carry on from there. But in any case, we're neutral right now. We came from the overbought neutral. Today did nothing, even with the 100-point drop, which I said it was one of the silliest rallies or say gap opens that I've seen. And what I'm actually mad about is that I didn't short it from the minute that it opened, because that was really your easiest trade. Because if you take a look at the 15-minute chart, you actually would have had it gone through if it opened and then came up. So really it was 3 points. And then from there, we came straight down. So that's where I was kind of angry that I didn't short the open, because, like I said, it was really I've been like when we were making the lows in April, and I was just saying that it was very silly for everybody to be selling because tariffs can be lifted, and everybody who sold because of the tariffs would have to jump back in. Now with this tariff stuff that's going on, where you have the EU that wants to talk. Now you're getting a 2% rally. Then you're getting some. But today was a strange one, because the court ruled that they're not allowed. They can't do tariffs. So why they would jump 100 points on that, I'm not really too sure, because they were going to get appealed and they're going to lose most likely. But in any case, it just didn't make any sense. And as I was saying, if let's say it sticks, they're going to be in trouble, because they've spent this money already. So now what are they going to do? Print money? And if that happens, interest rates will go up. We'll see inflation go up. So I know they put the tariffs back on until the appeal court, but as I said, that was just one of the dumbest gap ups that I've seen in a long time, because it just made zero sense to me at all on it that they really thought that a state Supreme Court can just stop all this. They tried their best, but unfortunately they're not going to be able to. They're going to get overruled on this. So any case, let's see what plays out tomorrow. Have a fantastic night, and I'll talk to you guys